How's it going, everybody? My name is Mike, and welcome to TrendSpider Live. Thank you, everybody, for joining today. And today, we're going to be analyzing the Dell earnings report, which comes out here in about 15 minutes, or at least the market closes about 15 minutes, and then we'll get the results after the bell sometime. But if you guys are out there in the chat, go ahead and say what's up and tell me what you guys are watching today. Of course, it was a pretty decent day in the market so far. If we just take a look at the SPY ETF over here, you pull it up right now. Very, very bullish day, as you can see. Let's take a look on the intraday chart on the 5-minute. But yeah, I have the Ripster MTF clouds on my chart, and we are going to be doing a nice webinar with the Ripster guys tomorrow. So if you guys wanted to, I will drop a link for that in the chat below, and I'll be using the Ripster MTF clouds today. I'm sure you guys have probably heard of them before, but essentially the MTF clouds are essentially a bunch of EMAs combined together from multiple time frames onto a single chart. So no matter which chart you're using, you can see the daily and the 1-hour clouds, which is really nice. And we're going to have Ripster on our live stream, or not a live stream tomorrow, in a webinar. And you can use the link in the chat right now to not subscribe, but sign up for the webinar and join us. It is completely free to join. Just use the link there. Predictions for Dell. Just cop some 116, 26, 160 call lottos. Let's take a look at Dell. Let's see what they're trading at. One thing, especially if you're trading options, that I'm going to take a look at over here. You said 160 calls for 116. So you got a couple months, which is cool. 160 is pretty far out of the money, but let me put on my Mentor Q gamma levels indicator. As you can see, our next call resistance is there at 150. I don't know. For me, 150 or 160 strike price is pretty high, so they're going to have to move quite a bit. Let me see if we're using the intraday. Yeah, we're using intraday here on daily. So that should be right. But yeah, 160, I mean, that seems pretty out of the money for me. Definitely a lotto play there. So good luck. Good luck. I mean, I do see on the daily chart, if we kind of scroll out here, that it is somewhat oversold. I would say at least, it's bouncing off the September lows and adjusted recently. So that's an interesting play there. It says 9.35% estimated move in either direction. So earnings. So for 160, how much move do you need? I mean, at 160, you're going to need a 26.5% move. So yeah, definitely going to need a big move to the upside for that option to play out. But if anyone else is out there playing Dell, let me know down in the chat below. Would love to take a look at what you guys are playing. I'm not in any Dell myself, I don't believe, personally. However, on the Ripster clouds right here, you can see that it is bouncing off of this cloud right here, or using it kind of as support over the last day or so. And then you have a target up here at around 135 to 140, 139-ish. So you could, play this range here, play it off the support down here, and potentially take profit at 135 or 139 based on the Ripster clouds. And this is a free indicator, you guys. I'm going to drop the link for it right now down in the chat. And again, there is going to be an entire webinar going on for this tomorrow after market close. So definitely tune in for that. Somebody's in a 129 call, or I'm assuming 129 expiration at a 133 strike. That one is a lot closer to the money. 133 is, about 5.8% higher than now, which is within the expected move. So I'm assuming you probably paid a decent amount of premium for that one. But I do have a prompt. So we're going to prompt our Sidekick here and see what Sidekick has to say about the Dell earnings report, which is coming out pretty soon here. I'm going to use Karen for this just because it's funny. And what Karen's going to do is she's going to analyze Dell ahead of its earnings today and summarize fundamentals. I believe Gary from Daily Stock Pick I kind of modified Gary's prompt for this a little bit. It says summarize fundamentals, including recent revenue, EPS trends, price to earnings margins and consensus estimates for this quarter. And I'm just telling it to review the past 4 quarters of earnings, including the EPS and revenue consensus versus what actually was reported. I'm going to have it report any option flow or unusual options activity for this week. And a big thing that Sidekick is actually really good at is looking at the major risks impacting any stock, I said specifically for this quarter, and the main drivers for upside. And I'm saying highlight another great thing that I love Sidekick for is analyzing recent news. So I said highlight near-term catalysts and provide a bull versus bear case for this earnings report. Another excellent thing that it's doing here is giving you a bull versus bear case. Karen says, you come to me at the last possible minute for a comprehensive analysis of Dell. Pretty funny. She got us there. Obviously, you didn't look. Well, let's see what Karen has to say. Dell has actually been showing decent growth, as you can see here, pretty much for, what is this, revenue. It's been growing quarter over quarter. EPS, mostly good, mostly beating. You see the actual and consensus here and the surprise. The only one it missed, I guess, was Q1 of 2026. And what else do we got here? Net profit margin, 3.91%. That is pretty small. 18.29% gross margin and 5.95% operating margin. PE ratio at 20, definitely pretty on the low side, especially in this market, honestly. And let's take a look at the major unusual options activity. Instead of having to actually go ahead and analyze all of this stuff, we just had Karen and Sidekick do it for us. By the way, if you guys don't know what this platform is, this is TrendSpider. We are running a Black Friday sale right now. You can save up to 65% off if you guys wanted to go ahead and try the platform out. I will drop the link in the chat below for you guys to sign up if you wanted to take a look at TrendSpider. And this is our AI Sidekick, which essentially is connected. It's like ChatGPT. We connected it to all of our financial data, and it's basically has the mind of a trader. It's a lot different from ChatGPT, a lot better because it doesn't have access to internet and it has the mindset of a trader. But as you can see here, there was $139,000 in premium paid for the January 28th $70 put. Someone's been in a hard collapse, of course. And then on the June 26 100 calls, which is definitely decent bid in the money. So someone's, pretty bullish there. And somebody in the chat was asking, what would you recommend for a strike price under 200, I think is the question. Let me double check. When the earnings is definitely not going to be happening for at least, I think, 10 minutes. Let me double check the exact time that the earnings is coming out for you guys for Dell. We also have ZS and HPQ earnings coming out as well. The earnings come out 5 minutes after the bell. So we got about 12 minutes until the earnings call starts. And let's take a look here. I will go ahead and actually ask Sidekick for you guys, what is the best option to play? Because I think that'll be a good one. It looks like a lot of you guys love playing options for earnings. And we're going to use the Wall Street Dominator, the Redditor, to go ahead and do that. Use Claude 4.5. So we say Dell is reporting earnings after the bell. Summarize the unusual options flow and give me the best YOLO plays for calls or put options for this earnings report. So obviously nothing here is financial advice, everybody. However, Wall Street Dominator is great at analyzing unusual options activity and showing you guys where the smart money might be flowing if you wanted to go ahead and take an option play going into earnings. Obviously, that is, a very risky way to trade, but, it's something that Sidekick could theoretically help you with. What are you guys saying in the chat? HPQ, we're going to take a look at as well in just a second, you guys. It's Dell is starting in about 10 minutes, or they're going to release numbers in about 10 minutes, that is. Numbers get released in 10 minutes, you guys. 10 minutes, 10 minutes. I don't know why. Am I talking into the void here? It starts in 10 minutes. All right, let's take a look at what Wall Street Dominator has to say about call options or just calls and puts for Dell. So it's saying there's massive sweeps on December 19th, 130 calls. The live earnings call, let me take a look for you on that. Dell earnings call. It's not going to be at least for an hour, so you guys have some time. There's a lot of December 26, 120 calls getting some money. July 26, 125s, and January 26, 145s. So, not that I recommend buying options before earnings. That is not how I trade, at least. That is where the money kind of is flowing according to the unusual options activity, which we had Sidekick analyze for us. And by the way, the earnings call is at 3:30 p.m. Eastern time, which is going to be in about like 2.5 hours. So quite a while for the call itself. November 25th. Yep. 2.5 hours from now, the call starts. Yeah, that is 4:30 Eastern. Yeah, I don't know. It might even be better to wait after earnings for the volatility to drop to start grabbing leaps. So the YOLO plays. If you think Dell is going to beat in Moon, Sidekick Wall Street Bets guy is saying 130 calls, 130 calls, and that is slightly out of the money. I actually think somebody was in the chat saying they're in 130 calls. How is it going, Chad? Great to see that it's your first time here. If you guys are new here, make sure to hit the like button and subscribe. And so, because we're going to be going live throughout the next couple of weeks, quite a bit. We got a lot of the earnings have wrapped up, but we do have some decent earnings coming up over the next few weeks. So make sure to like and subscribe so you guys can stay on top of every time that we go live. I mean, if I were, I don't really trade Dell. Dell is not something that I trade personally. However, if I were bullish, I would be looking for it to hold probably somewhere around this 118 pivot level right here. Myself, as you can see on the Ripster MTF clouds, there's also another kind of support here at like 124. So I guess the play would probably to be, if you're long, maybe go long and try to take profit around this 135 to 139, at least according to the Ripster MTF clouds. For the 130 calls, by the way, it says 19th of December and the 5th of December, which are very close. But that is just the ones that are getting a lot of bullish flow. Definitely not financial advice. And then for puts, we got the 120 puts for the same two dates and 125 put. So 19th of December, 120 put, and 5th of December, 125 put were the ones showing a lot of flow, at least for recent times in this week. The real DGen play, 0DTE vibes. It says 28th of November, 125 puts is the real DGen play. But it is saying the flow is very mixed. Of course, nobody knows anything. But I'm seeing more aggressive call buying at higher strikes and, of course, put hedges. So, again, pure gambling. It says they're expecting 2.39 EPS if they beat 10 to 15 cents in guide up calls print. If they mess their guide down, puts print. Of course, even if they do beat and guide up, you never know. They could still tank. It is earnings. It is not necessarily the most stable strategy to play if you're just buying options ahead of earnings. If we are going to go ahead and look at the Mentor Q gamma levels right here on my chart as well, let's take a look at what the Mentor Q levels have to say. So we do have put supports down on 0DTE at least 120 and 115. So that's where your supports are going to be in a one-day minimum at 116. So basically a 120 to 115 level is going to be your support. And if we pull that up on the bigger chart here, you can see that is pretty much right at that line that I drew. Right at the bottom, it's at that pivot level, which doesn't surprise me because option pricing tends to, react around these key levels. So definitely that 117 is kind of right in the middle there. That's definitely going to be the line in the sand for the bulls. Okay, and if we go back to the 15-minute, we'll check the upside on the Mentor Q gamma levels. Let's take a look at this again. And remember, it was saying, 120, 125, or 130 calls was, kind of the strike, which is slightly above. And the 1-day maximum is 132. So if you buy calls at all, you're going to want it to probably break at least above 132 to account for all the implied volatility decay that you're going to get tomorrow. So, the 130 strike isn't the worst. It's slightly, it's $5 up and out of the money, which is just about 5%, which is a realistic kind of move there. And then we have, the 1-day max at 132 and call resistance at 139, which is interesting because it is lining up with these ripster levels on the clouds. The ripster levels are around, the 135 to 139. So I'd say 139 has the most sort of resistance lining up ahead in front of earnings. And TrendSpider honestly makes this analysis incredibly easy. I mean, as you guys can see, all I did was put on my Mentor Q gamma levels. I put on the ripster clouds, which is a completely free indicator. Links are down in the chat. I already dropped them, but I will go ahead and drop them again. I'll drop the one for the ripster clouds right now. So you guys can take a look at the store. Again, it's completely free to at least import them on the store. Actually, Mentor Q, though, is an indicator that you have to pay for. However, you do get a discount if you use the coupon code over there on the TrendSpider store page. But it is a very nice indicator that the Mentor Q guys have built, especially for analyzing options going ahead of these reports. And again, the market is closed, so let me go ahead and actually put on my after hours here on the 1 minute. I'm going to take off these clouds and this for now. And let's see what happens. We should get the report here dropped in about 3 minutes. So I'm going to add our news widget into a new column. This is the quickest way to stay ahead on when earnings drop, is using the TrendSpider news widget here on the right side of your screen. When the earnings drop, it should pop up right there, which should be just in about a few minutes. Let's take a look at ZS. ZS is also reporting today. Nothing there yet. And then HPQ is the other one that is reporting today. And HPQ is kind of on the downturn right now. However, let me pull back up Dell and see what's going on here. Maybe I will even set up a multi-chart view for you guys so we can see them all happen in real time. But as you can see, we are just patiently waiting here for Dell to report. And again, we have Dell reporting, we have HPQ, we have ZS reporting. And then what I'm going to do, I'm going to put up SPY as well there. Let's throw this guy up here. Oh, and as you can see, we're already getting some movement there on HPQ to the upside. So if anyone's playing HPQ, it just jumped up quite a bit, just about 3%. Pretty solid move. Pretty solid move. Scrolling a little bit here. Dell is up here at the top left. We got HPQ over there in the top right and Zscaler over here in the bottom left. Somebody said options 2 standard deviations out of the money both ways is my go-to, but I don't think the STIN market will produce that kind of move. Maybe you're right. Maybe you're right. And when you're saying options 2 standard deviation out of the money both ways, I'm assuming you're talking about buying a strangle. Is that correct? But again, if you guys are just tuning in, if you guys have never tuned into a TrendSpider live stream before, make sure to hit the like button and subscribe, because we are always going live, showing you guys the most important market events that are happening in real time using our platform. Look at that. Dell just absolutely skyrocketed. Wow. There's about 1% move to the upside, but everything looks insane on a 1 minute chart, doesn't it? Look at that. And it's completely flying off of my chart. Completely. It just broke over 130 133 damn near. And it looks like this thing is moving pretty well. That was about a 5% move to the upside so far. So congratulations if you are long Dell. And we're getting ZS. Zscaler is absolutely flying below, flying right off my chart to the downside. Insane moves coming out right now. Thank you guys for tuning in to TrendSpider Live to watch them with us. Puts in call. I don't know what to call you. I'll call you Sniper. Puts in calls. I just buy a few of each every now and then you get an oracle. Yeah, you're not wrong. What is going on, monkey man? What is going on? But that is the nature of buying options, isn't it? Lose a bunch of your trades, but eventually you win a big one and it pays for all of them, hopefully. Kind of similar with trend following. Seeing some crazy moves. If you guys are out there in the chat, let me know what you guys are trading right now. If you guys are in any of these earnings plays that are flying off of my charts. Well, they say NVIDIA is 5x times on the call. We'll find out. The call is not for quite a while from now, but maybe they will. And we see SPY here at the bottom left chart, not really moving a ton. So these earnings, you know, it's Dell. It's not NVIDIA, Microsoft, one of the massive stocks. So it's not moving the SPY a ton here, really at all. This is a nice thing if you're trading SPY. That's why a lot of people trade it, because a single stock movement like this is not a risk to them. Can you go over the Dell numbers? Absolutely, we'll go over the Dell numbers. So now that we've seen the movements, let me drag this away for a second here. And luckily, we have the amazing sidekick to go over the numbers. First, let me put this news here in the new column. Let's just see from my small brain perspective before I use my big brain sidekick AI what is going on here. So Dell reports EPS beat 2.59 beats 2.47 estimate, sales of 27 billion misses slightly higher at 27.126 billion. So they did a half beat. They beat EPS and they missed revenue. And it looks like they're giving out some guidance. Let me refresh this one more time. Dell sees quarter four adjusted EPS 350 versus 3.23, which is good. They guided up on EPS. And then, all right, let's see. Dell now raises, Dell raises fiscal year 2026 adjusted EPS guidance from 955 to 992. Very nice. So they guided up on EPS, it looks like. They beat EPS, but they did miss revenue. They did miss revenue. But it looks like all that move that just happened got absolutely, completely erased right now. Just give me 1 sec, guys, before we go over the numbers. Look at this. So we had a 6% move to the upside. And then from that upside move, we're down another 6%. And we're back to right where the market started, or closed, I should say. So let me go ahead and grab my sidekick here. We're going to go back to Karen's chat. If you didn't know, you can go back to a previous chat and continue it. So we already asked her to analyze Dell earnings before the earnings dropped. Now I'm going to say, okay, now the Dell earnings just dropped. Take a look at the recent news. Analyze the EPS and revenue. If they beat or miss, and check out the forward guidance that was just dropped, and give a bull versus bear case summary and highlight key risks of the business based on this earnings report. So now that I've typed that into Sidekick, Karen is just going to go in there and take a look at all the stuff that I just read manually. I was like, yeah, you know, they had a half beat, EPS beat, revenue miss, guided up on EPS, but we're going to have Karen go in there and do an even probably better analysis, because AI has the ability to go ahead and take a lot of information and summarize into a little bit, give you a nice bull and bear case and all that stuff. Damn, I should have bought the Dell dip there. Going to be in it to win it. There is not much. Yeah, I guess there's a dip here you could have bought. if you're trading this after hours session. And it looks like it did go ahead and bounce off the closing price and is heading back up. But if you guys are out there in the chat, go ahead and hit the like button, subscribe if you're liking this analysis, because Karen is about to tell us everything that we need to know. She says it's a mixed bag special. The numbers that matter, since you clearly can't read. Karen does love to yell at you. What are you talking about? Someone's not being nice to me. We can't ban anybody. It's a public live stream that I know of. However, before I look at this Karen report, I kind of want to run a poll and see what you guys are thinking of what's going to happen going forward. So I have Dell up on the daily chart right now. How many of you guys are bullish and how many of you guys are bearish? That is my question, but I'm going to give us, let's think of a question that I can ask you guys. Hey, I don't know who's fighting out there in the chat, but y'all need to chill out, all right? Let's start a poll here. So I'm going to ask you guys a poll. Will Dell hit, so I'm going to say, will Dell hit, I'm going to put on our MTF clouds to see a price target. Is Dell going to hit 140, which is the top level of these MTF clouds? Will Dell hit 140 before it hits 117? Let me know what you guys think. I just started a poll. If you're on YouTube, go on the poll and vote. You have to be on the desktop version of the YouTube. So if you're not on desktop version, go ahead on the desktop version. But the answer or the question is, will Dell hit this level before it hits this level? Let me draw another vertical line here. So if you're bullish, basically Dell of hitting 140, click yes. Curious to see everybody, there's already 7 votes. Most of you guys have voted yes. So most people are saying that's going to hit this upper level before it hits 117. So that means there's a lot of bullish people out there. If you haven't voted yet, go ahead and vote as well. And, you know, I don't know why you guys are fighting in the chat. There's nothing to be upset about. Because Dell just reported a pretty nice earnings, which is always fun to watch. While you guys are voting, remember, do you think it's going to hit this line before it hits the bottom line? That is the question. Go ahead and vote in chat. Almost everyone is saying yes. So if you want to hop on the bandwagon, I guess you could just click yes. But let's take a look. So again, actual EPS beat the consensus EPS of 2.47, came in at 2.59. They beat on EPS. Revenue missed, which is not good. You know, half beat, beat and miss. And forward guidance was good. Here's what Dell actually impressed. EPS guidance 350 versus 3.23. And they raised the fiscal year EPS estimate from 955 to 992, which is a 3.9% raise, which is always good to see. So here's the bull and bear case of Dell. So strong EPS beat, guidance raised, obviously. Great EPS growth, that's 20%. Q4 guidance beat. And honestly, I think guidance is one of the most important things when it comes to an earnings call. And then AI infrastructure demand, of course, driving the confidence. We're going to take a look at where the money is flowing here in a second throughout all the sectors for the last week and day and all that. But here's the bear case for Dell. They missed on revenue. Of course, growth is slowing. That's definitely not something you want to see here. Mixed results, supply chain headwinds, margins aren't very great from competitive environments. And they're even saying a guidance raise might be not good enough. And so my take, this is a textbook example of why you don't wait until earnings day to do analysis of Dell. You guys hear that? You should be using Sidekick weeks ahead to play, you know, maybe the run up to earnings instead of, you know, waiting till now. I'm sure you guys were doing that, right? But the guidance raise is nice, but that revenue miss is definitely, I agree, going to haunt them. If you're not growing revenue in this environment, that is not a good sign. Bottom line, mixed results typically leads to sideways trading or modest moves, which could be worse. which could be worse, right? And that's pretty much what we're seeing. I mean, it was still a pretty green day for them overall. If we go back onto the 15-minute chart, you can see they are up significantly for earnings. They actually dipped and then came right back up. So they're looking pretty good, you guys. You guys are looking pretty good. I am sure you are a Dell insider arguing on the chats. I have no doubts in my mind. But yeah, it looks like most of you guys are saying that Dell is going to go ahead and hit 144, 117. Cool. So I hope you guys made money. It looks like the stock is up in after hours. Again, if you guys are just joining in, we just analyzed the Dell report. It was an EPS beat and a revenue miss. And we took a look at the key levels here on the Ripster clouds and Mentor Q gamma levels. And we figured these were the two lines that traders need to watch going forward. And we also pretty much just reacted right up against this almost 135 Ripster cloud level. We also had a Zscaler report, but I think more people are asking about HPQ, even though Zscaler looks like a crazy move. Let's take a look at HPQ now. HPQ, let's take a look. HP adjusted EPS 93 cents beats the 92-cent estimate. Sales beat as well. So it looks like, was that a double beat? Yeah, double beat on HPQ. Don't see any forward guidance quite yet, though. They might have just came out. Yeah, they came out literally just a minute ago on HPQ, and we're not getting the most insane movement here. If anything, we have moved down a little bit to like minus 3%. You guys, stop LARPing as the CTO of Dell, please. Rise back onto your live. Yeah, I mean, maybe I will invite one of you guys onto our lives, but if you guys are going to be arguing there in chat, then maybe not. HPQ, let's take a look at ZS, because ZS is the biggest move from earnings today. It looks like, at least. Yeah, it's down nearly 10%, basically 10% on ZS. Oh, that's glad. I'm glad you guys are not arguing. First of all, let's take a look at the daily chart. As you can see on the daily chart of Zscaler here, ZS, it is trading right around this pivot level from September 3rd, I'm sorry. And it bounced right above it right during this earnings report, literally just not too long ago. There's pretty clear resistance right here at this Ripster MTF cloud. And again, if you guys want to see a full webinar on these Ripster clouds, we are running one tomorrow. Actually, the guys over at Ripster himself is going to be running the webinar. I will be there helping him, but chat is down below in the chat. I'm sorry, the link is down below in the chat to go ahead and sign up for that webinar via Zoom, which is going to be tomorrow around the same time as right now. It's actually going to start in exactly 24 hours from now, give or take. And also make sure you guys hit the like button and subscribe. If you guys want to do my job, that would be awesome, but I think I have to do it. Thank you for the offer, though. But let's take a look at what Zscaler. Look at that Zscaler revenue growth every single time. Every single time ZS has reported revenue, has been a good quarter. And look at this, all green bars across EPS and revenue. But let me take a look at what is going on Zscaler using Sidekick. So I'm going to start a new chat. Say, okay, ZS earnings just dropped. Take a look at the recent news. Analyze the EPS and revenue if they beat or miss. And it's going to do all of that right now. But as you can see here on the Zscaler charts on the daily, it is not reacting very well at all, even though it looks like they raised the EPS guidance and sales guidance, which is something you definitely want to see. And we see EPS beats estimate and sales beats estimate. So we had a double beat on ZS and a double guidance beat. They guided higher on both revenue and EPS. And look at that. They are still down about 10%. So this is a classic example of why, even if you're completely right, even if you have insider information on these stocks that are reporting earnings, you never know. Yeah, I don't know what is going on in the chat today. Must be bots. So let's see. Let me tell you what went down with ZS earnings that just dropped. Again, EPS beat by 11%. Revenue beat by 15 million. Oh, I guess this is Wall Street Dominator doing this for us. Let's see. Guidance, basically in line on EPS and a slight beat on revenue. But full year, fiscal year 2026, that was just the Q2, which is basically in line and a slight beat. They raised EPS and raised revenue, which is a massive raise in revenue. Guidance, which is definitely a good sign. However, even with this good news, as you can see, the stock is not having it. Oh, look at this. I actually can put you guys in timeout, and I'm going to do that. There we go. Okay. Some bots or whatever was going on in the chat. Anyways. Back to Zscaler. Let's take a look at what else the bull and bear case was saying. So, of course, the bull case was guidance raise was insane. Both EPS and revenue beat. Cloud security adoption accelerating. Margin recovery on the horizon and strong momentum for sure. But I think the biggest thing here that probably caused a decline was the Q2 guidance was just in line. It wasn't crazy. It wasn't good enough. And saying these multiples are spicy. The valuation is high on ZS. So I'm going to ask it because it didn't actually tell me. Take a look at the ZS fundamentals. Look at price to sales ratio, price to earnings ratio, EV to sales, margins, income, and everything else. And give me your take on the company fundamentally. I also have the chart open on my current chart. Draw key levels of support and resistance and plot any major recent news right on my chart. So I'm going to have Psychic do some work right now. I should have had the daily chart. Whoops, I thought it was on the daily. That's fine though. Oh, maybe it just grabbed the daily. But I'm going to have Psychic draw some levels for us on the chart. And it's going to analyze the fundamentals as well. Tell us what it thinks of it fundamentally and technically, all for us. What's up, Benny? Why is Dell down? EPS was good, but they missed on revenue. The indicators I'm showing, Monkey Man, this is the Ripster clouds, the MTF clouds. And we're actually doing a webinar with them tomorrow via Zoom that you guys can go ahead and join. I will drop the link down in the chat once again for you guys to sign up if you want a full webinar. But we're going to post it on YouTube as well. But look at Zscaler here, you guys. Look at what Sidekick went ahead and did for us. It plotted all these levels of support and resistance, and let's see how it did. On the daily chart, it always draws it 1 day ahead of advance, just so you guys know. So I just dragged them over a little bit. Also, you can see there's a sell-off there. It was a pretty wild chart here on Zscaler. It's pretty crazy formation here. A nice range, though. But there's the peak right there before the drop, all-time high, which is obviously going to be the resistance. And now, since we're trading all the way down here, 268, it was saying was critical support, as you can see, which is honestly a pretty solid line in the sand right there at 268. And 251 is going to be the next support. So we really hopefully open up above that 268 support level. Benny, we are running a Black Friday sale right now. It depends on which plan you get, but I'm going to drop the link in the chat for you to check out all the plans. But I will say the Black Friday sale is absolutely the best time to buy this platform, and you can save up to 65% off. So I dropped the link for you. Check it out and let me know what you think. If you have any questions, I can answer them. If you want to see anything the platform can do, can also show you in real time. But you guys, let me take a look back at Dell again. Look at that. Dell. It's actually sitting at one of the Ripster clouds now. It's sitting right here at this support, this line of support, which is the Ripster cloud. I believe this is the cloud 1, which is the 60 or the 1 hour time frame. So it's the 34 and 50 EMA cloud from the 1 hour chart, no matter which chart you're actually looking at. Since it's called MTF clouds, it's a multi-time frame. So it's plotting essentially the 1 hour EMAs on every time frame that you look at. I'm currently on the 15-minute, but it's still the 1 hour right there. And these ones up here should be the dailies. This is cloud 2. This is cloud 1. And if you go to the indicator settings over here, you see cloud 1 is the 34 and 50, or the third time frame. D is the 50 and 55 for the daily. So cloud 3, which is probably the very top one. Yeah, this is the daily cloud at the very top there at the 139 level, which is basically where you draw the line in the sand. Those are the daily clouds. As you can see, they're the slowest because they are the slowest time frame. And these are definitely going to be the quickest time frame there on the 1 hour. And same over here with these lines right there at cloud 2, which should also be the 1 hour. Yeah, TrendSpider honestly has an insane AI bot. It is actually probably the best one in my opinion. We were actually just using TrendSpider AI to go ahead and break down Zscaler and Dell. But if we look at ZS, our AI bot actually went ahead and drew all these levels for us, plotted recent news events, which wasn't much, mostly just technical stuff. But if you look on here, this is how our AI bot works. ChatGPT absolutely cannot. I mean, it can give you, if you give it the data, maybe it can, but this here, one, it's connected to all of TrendSpider's data, which we pay a ton of money for. Fundamental data, obviously all the chart data, all that stuff it has access to right away. And also, this sounds weird, but it doesn't have access to the internet, which is a good thing because the internet, I don't know if you guys have noticed, all these articles, it could pull old articles that maybe are outdated, or maybe someone just wrote something that wasn't corrected or something, and it feeds it a bunch of data which maybe doesn't line up with each other, which can definitely hinder the results on any other chatbot. But this one here is connected to all the same stable and consistently comparable to each other data sources, which is, in my opinion, what makes it so good. And as you can see here, it actually has the mind of a trader in the back end. There's prompts in the back end that teaches it to think and respond like a trader. And there's actually multiple different personalities. This is the Wall Street Dominator personality, which is kind of like going to convince you to YOLO play, or not convince you to YOLO play, but it's more of like a Redditor is what it's called. It talks like a Redditor. It says, all right, bro, let me break down the ZS fundamentals for you, stuff like that. But you can see here the price to sales ratio. He said these are wild, these valuation metrics. As you can see, LMAO, they're not even profitable. It's a negative PE. EV to sales, a little bit high, along with the price of sales at 17. You can see their operating margin is negative, net profit margin negative. They're not the most profitable company. They're not profitable at all. However, revenue growth is coming in pretty good. Yeah, this is just one of the personalities. You can use this one. You can use Warren Buffett. You can use like Graham, long-term investors, whoever you want. Actually, I actually looked at the Ripster clouds. It can actually read, if you guys have custom indicators, it can even read the indicators on your chart. Look at that. It says your rips are clouds. You're right in between the blue and gold clouds right now. Price is above both daily clouds, which it was probably. It was until it wasn't. We dropped heavy below those clouds right there. So maybe we just ignore that. But here's this take on fundamentals, degenerate take on fundamentals. It's 76% gross margins, which is great. Great revenue growth. Loss is shrinking. I mean, that's solid. Price of 17 is, it says actually cheap for a SaaS if they keep the growth, which is decent. And then the bear case, still losing money. Of course, it's not even profitable. And that's really, kind of the story for most growth companies. They got to keep growing their revenue if they want their price to keep going up. It says the reality, you're basically paying 2027 to 2028 earnings today. If they execute, you look like a genius. But if they stumble, you're working at Wendy's with me. Love it. The chart shows price is clearly torn between the growth story wants to moon and valuation concerns of getting sold off. So that is what's going on with Zscaler. Honestly, pretty damn good report, but at the same time, I guess it just wasn't good enough for this market. They are not profitable. But hey, if you're bullish on this, maybe you'll get a nice buying opportunity. If we look here at the weekly chart, had a decent kind of little setup here, a little breakout, but yeah, I'm seeing some support here, probably around the 260. What are we at right now? 267. So I would, if you look at the weekly chart here, you see a line in the sand at 260 from over here. Let's take a look back at Dell. What is the deal with Dell? It's a good question. Dell is sitting at kind of its support right now, 125. But they missed on revenue. Yeah, they're kind of barcoding down there. But they missed on revenue, beat on EPS, which is why they are essentially pretty much flat, not up or down. So you can't be that mad. And you guys, if you want to take a look at where the money is flowing today, you can look at the stock market map here on TrendSpider. I have the sector ETFs loaded in. Today, a ton of money flew, or over the last 7 days, a bunch of money actually flew into the XRT ETF, which is retail, like stores, I believe. And then healthcare has still been on the rise. Healthcare has been absolutely killing it. If we look at the XLV ETF here on the daily chart, as you can see, XLV is up like 17% since September 30th, which is pretty good for healthcare. So this is definitely the sector the money is flowing. It had a nice base and breakout there. So we'll see, maybe at some point it'll pull back, maybe to this Ripster Cloud EMA. Which one is this? And if you wanted to use this indicator to track the support on TrendSpider, you can even just right click on this line, create an alert on it, maybe touch. Daily confirmation candles, you would want to go down maybe to the 10-minute and then create that alert, and you'll get alerted when it touches that level. But that is where the money is flowing currently. And also XRT has been getting some love lately as well. I believe like ROST absolutely popped off lately. They had earnings, a few days ago, not long ago, around the 20th of November, like last week sometime. So yes, X is causing XRT to kind of go up. They're up highest out of all the sector ETFs today, about 4.5%. Consumer discretionary is up as well. And the losers of the day is Bitcoin. Bitcoin has not been getting very much love lately. Energy, gold and silver, and then semiconductors are just barely flat on the day. From open to close, they're up, but from Friday's or Monday's close, they're up barely at all. They're basically flat from yesterday's close. But they're hanging in there. They're hanging in there. As you can see, they're kind of in between these two cloud levels on my chart. So we will see what happens with semis going forward. I think within the next few weeks, we do have AVGO reporting earnings. They are looking decent. But NVIDIA has not been looking great. Today got bought up pretty well. But overall, it's definitely been lagging semis. Yeah, I'll pull up Dell back up on the chart here. Maybe This is my multi-symbol view here of all the earnings movers today. Wow, HPQ, looks like HPQ got kind of shot down about 6% on HPQ. Dell is basically flat, just up a tad. Zscaler is still down quite a bit, and SPY is mostly unchanged since the close. Yeah, Dell around 128, 127.50 actually now. What else are you guys watching out there? Is there anything else that you guys are seeing on your charts that maybe I am not? If you guys are still sticking around, thank you for joining. Make sure to hit the like button and subscribe. Let me take a look at the regular charts again right here, see if there's any more news. So again, mixed Q3 earnings. Dell is winning in AI, they say. So, I mean, not the worst looking report here on Dell, but kept it flat, probably because they missed on revenue. Probably because they missed on revenue. But they're hanging in there. They are hanging in there. How's HPQ earnings report? I believe, let's take a look at HPQ. I don't think we actually analyzed HPQ yet. We did ZS and Dell so far. And I'll show you guys a new personality. Let's do Simon the Data Dude. He's going to care mostly about numbers. And we're going to have it analyze HPQ. So I'm just saying the HPQ earnings just dropped. Take a look at the recent news, analyze the EPS and revenue if they beat or miss, and check out the forward guidance that was dropped, and give a bull versus bear case summary and highlight key risks of the business based on this earnings report. While we wait for that, somebody dropped in the chat the ticker ADSK Autodesk. I guess they also reported earnings as today, probably a smaller company. Put on these after hours movements. ADSK up pretty good. Pretty good. We'll take a look at this here in a second as well, up 5%. Let's get back over to HP over here. HPQ, which is down, I believe, what was it, 5%? Yeah, nearly 6% on these earnings report. So let's take a look at here. So this is the current data. It gives you the source. So adjusted EPS beat and revenue beat. So on HPQ, it looks like slight beat on both ends. Let me confirm that with the news here. See, all this news came in right as the report dropped on our TrendSpider platform. Yeah, so just a slight beat on both EPS and revenue. Forward guidance is saying was weak. Midpoint of 77 cents for EPS versus the 79-cent estimate, not good. Same with GAAP EPS. Full year, also missing. Double miss on forward guidance for both EPS here on HPQ. They did go ahead and increase their dividend, though. Looks like they laid off about 5% of their workforce, which is the target, maybe part of targeting $1 billion in cost savings by the end of 2028. And let's take a look. The bull case and bear case is pretty much obvious. Weak guidance for bear case. Of course, they beat on the top and the bottom line. Media concerns. Printing secular decline. Interesting. Yeah, that makes sense. AI execution risks, sure. But let's look at the bottom line. Bottom line is that HP beat expectations, but guidance disappointed, which is honestly terrible in this market environment. The restructuring is a defensive move against secular printing decline and AI investment needs. So it's saying that the weakness, the drop of about 5 to 6% in HPQ is justified, which honestly from those earnings are woohoo. Oh, I think that was just a weird candle there. It was up, but it's still down quite a bit. So HPQ not looking super good, you guys. Not looking super great. Posted pretty bad forward guidance. And honestly, that is not something that even looks good on the chart. It's not trending at all. So not something that I personally am interested in. pull up Dell here again. And I believe someone asked about Dell guidance. Let me double check. Yeah, the Dell forward guidance was good. Just double checking here. Guidance raised, which is good. Q4 guidance beat. So yeah, pretty solid, pretty solid. Yeah, no problem, no problem. Thank you for joining in. Make sure to subscribe and join us next time. It was great having you in here, though. But yeah, Dell sitting here at this cloud support from the Ripster MTF clouds. And yeah, if you want to see the full guidance here, it looks like 350 versus 323 for EPS. But look at the full year guidance. It's probably more important. 955 to 992. So they're expecting 992 instead of 955, which is really good. I don't think they did a revenue forward guidance. Let's see. EPS guidance. No, I don't see anything about revenue, but EPS was good, which is interesting. I believe, yeah, revenue was that slight miss, which is interesting that they don't forecast revenue guidance, especially since they missed. So pretty mixed bag here on Dell. Again, EPS guidance was good, but they didn't report revenue guidance, at least from what I'm seeing. Maybe they did elsewhere, and there's just not a news story on it yet, and they missed revenue as well. So yeah, there's that to take into consideration. What else are you guys looking at? I remember someone said ADSK. ADSK, pretty wild candle here. Wild candles here on the 1 minute chart, up about 5%. Autodesk. Let's take a quick look here. It looks like the company reported Q3 adjusted EPS and sales above analyst estimates. They raised adjusted EPS guidance from 980 to 998 to like 1019, 1020-ish, which is a good sign. Obviously, they raised guidance. And yeah, that was for the full year. EPS beat and sales beat. So that a double beat and a guidance beat here on ADSK. So it's looking pretty good for ADSK as far as earnings go. Let's take a look at the weekly chart on the bigger time frame here. Really, the stock hasn't gone much of anywhere for quite a long time now. It's trading pretty much getting rejected at their 2021 highs peak here. All through 2022, it died like everything else. And even through all the recent gains, this stock did not get much love at all. But EPS and revenue are looking incredible on the growth front. You can see over here, all green revenue bars, which means year over year, they've been growing every single quarter since like 2023, which is definitely good to see. And they provided yet another good quarter today. One who else reported earnings this morning was Baba. Almost forgot. Baba reported earnings this morning. Let's take a look at the intraday chart. I'll start at the 15-minute. See the reported earnings right over here. Some pretty crazy wicks during that earnings report. But let's take a look at what the Baba earnings looked like. So we're going to use our trusty sidekick here. And Baba, yeah, is an ADR. So our data, we definitely have a good amount of data here on Baba. You can see all the revenue and EPS are in there. However, it is an ADR, so maybe we don't have as much data as a non-ADR. But let's see what Sidekick pulls for us. Is anybody out there in Baba? Because they did report this morning. And it looks like it didn't get an insane amount of movement today. Pretty big candle, though. I mean, the range was 8% moves today, which is pretty good. And that's including after hours. Most of the moves obviously happened in after the pre-market session, I should say. Monday, it didn't do much. Earnings report, it ripped higher, but then came right back down and then some today, closing lower. So interested to see what happened here with Baba. Looks like EPS beat and revenue beat. EPS beat by 25% or so, EPS by 1%. But that was the estimate. Looks like the year-over-year EPS dropped by quite a bit due to reinvestment in AI and cloud infrastructure. Let's take a look at that. Yeah, look at that EPS. Wow. Minus 71% from last quarter. Same kind of a Meta story here. You guys remember that when Meta tanked because one of their EPS numbers is really bad because of a CapEx issue. But everything else looks good because, yeah, they at least beat their estimate. You can see they had, up 25% compared to what analysts were expecting, which is very good. But, I guess they're just doing a lot of spending right now. Kind of what a lot of companies are doing. The Dell call is not going to be for a while. It's not going to be for another, 3:30 Central, which would be, what is that? 3:30 Central is 4:30 Eastern. Oh, that is right now. Let me see if their webcast is going on. Well, it's already 15 minutes in, but let me see if I can get in. I'm getting all twisted up with time zone. I'm in Pacific time. Everyone I talked to is in Eastern time, and this thing was reported in Central time. So let's see. Got me all confused. If I can pull it up right now, I will go ahead and do that for you guys. Are you guys out there looking to watch this Dell call? Yeah, probably won't be on YouTube. Don't worry, I got it for you right now. Now it's on YouTube because you're here on TrendSpider. Hit the subscribe button because I got you. 1 second.
Remains a solid
Can you guys
starting
hear
point
that?
as you think about next year.
This is the
We are
Dell
highly
earnings
confident
call.
in our ability to drive EPS growth,
Let me know if
supported
you
by
guys can hear,
multiple
then
levers,
I'll let you guys
including
listen in.
leveraging our go-to-market engine, improving gross profit, scaling operating expenses, and ongoing share repurchases. In closing, we delivered a record Q3 with revenue of $27 billion and EPS of
Guys are out there. Let me know if y'all
$2.59,
can hear the
both
call. You
quarterly
should be able
highs,
to.
driven
All right,
by strong
perfect.
execution across ISG, CSG, and disciplined cost management. ISG continues to see sustained double-digit growth and accelerating AI demand, evidenced by $30 billion in AI server orders over the past 3 quarters. We are focused on capitalizing on the ongoing PC refresh and expect continued growth from CSG. We remain focused on driving shareholder value through strong cash generation and capital returns. Thank you all for your time. Now I'll turn it back to Paul to begin our Q&A.
Thanks, David. Let's get to Q&A. In order to ensure we get to as many of you as possible, please ask one concise question. Operator, let's go to the first question.
Thank you. We'll take our first question from Samik Chatterjee with JP Morgan.
Hi, thanks for taking my question. Jeff and David, maybe since this is sort of the topic of investor conversation mostly at this point, if you can flesh out your thoughts on the kind of reaction you expect from customers in relation to the pricing discussions by sort of the product categories, where do you think it's more sort of easier to take some of those pricing actions versus not relative to your overall portfolio? And David, if I heard you correct, you're saying to sort of use your investor day targets for about mid-teens EPS growth as still a starting point for next year, despite those sort of dynamic sort of headwinds on the memory side. Can I just clarify that as well? Thank you.
Sure, Samik. Let me wade my way through that. I suspect it won't be the first question this afternoon, or the only question, I should say. Look, we're in a very unique time. It's unprecedented. We have not seen costs move at the rate that we've seen. And by the way, it's not unique to DRAM. It's NAND. It is hard drives, leading edge nodes, across the semiconductor network. There is a, if you will, I'd categorize it as demand is way ahead of supply. And as we wade our way through that, we're going to lean on the things that we've always done. We have a lot of experience at this. This isn't our first DRAM cycle. There have been 7, I think, in the last 40 years. Michael and I have been here navigating the organization in various ways through that time. Our senior leadership team and our supply chain has been through every one this decade. First rule of our supply chain is to get the parts. Supply matters, mix matters. And as we get to supply and mix, our job is to minimize the impact of that to our customers. But clearly, we're in a situation that is not typical. We've learned a great deal since COVID, since previous cycle of this last super cycle of this magnitude was 2016 through 2017. And we're going to do everything we can to minimize the impact. But the fact is the cost basis is going up across all products. No one more unique than others. Everything uses a CPU, has DRAM, has storage in it. So with that said, we're going to do things we've always done. We're going to work on configurations. We're going to work on availability, adjust mix. Our direct model allows us to move demand where supply is. Our direct model allows us to act to the market signals it gives us quicker than anybody else, allows us to price accordingly, reprice when needed, and we will make our way through that across consumer PCs, commercial PCs, into server storage, and through our AI servers. No product category is not going to be impacted in terms of the aggregate cost basis moving. Again, our number one rule is get parts. Secure supply, secure the mix we need to meet the customer demand. The world needs more computational intensity, needs more compute. If you're in the world of AI, token growth is going. We see a consolidation in servers. Consolidation in servers is driving denser servers with more DRAM, more storage. And we're in the middle of a PC refresh that's not complete. So I don't see how we will not, what's the best way to describe it? I don't see how this will certainly not make its way into the customer base. We'll do everything we can to mitigate that. As we mentioned earlier, our cost outlook for Q4 is largely unchanged. And David just gave you what our guidance is, that we believe that you'll see sequential profitability improvement in our company across the broad portfolio while managing an increase in our cost basis. That's what we're going to do. That's what we know how to do. And we have all of the tools in our company to be able to do that effectively and fast.
And David,
Then
can I
in
just
relation
clarify
to
Yep, please. Thank you.
Yeah, hey, Samik. Yeah, like we said, it's very, very early in our planning process, obviously, but the framework from our security analyst meeting is a good reference point to start with. So I think EPS included in that is the zip code we'll be in. We'll be looking obviously to leverage our go-to-market engine, which is differentiated. All the things Jeff has just outlined there in relation to our supply chain. We'll continue to drive significant scale in our OpEx. And then obviously stay committed to our capital return KPIs, right? Whether it's share repurchase or stay committed to our dividends. So look, we feel we've many tools in that toolbox to allow us to stay agile and deliver on our EPS numbers. But like I said, it's still very, very early in the planning process here.
Thank you. Thank you both.
Thanks, Samik.
And we'll take our next question from Mark Newman with Bernstein.
Hi, thanks for taking my question. Congrats on a great quarter, particularly impressive on the AI server orders. I wondered on AI servers if you could talk about some of the recent comments that have been coming from NVIDIA around the potential vertical integration that they're doing, getting a little bit more involved in the supply chain, and how that may impact on how Dell is navigating around that. And also on AI servers, any color on the mix of AI servers, any change on the mix, for example, enterprise as a portion of AI server orders would be useful. Thanks very much.
Sure, Mark, let me make my way through that. I mean, first of all, as we look forward to the new technologies that are in front of us. We remain excited. We think there's ample opportunity for us to continue to differentiate. These large-scale deployments are very complex. Our value add is at the rack level, is at the solution level, L11 and beyond. That differentiation, we believe, remains for the next several cycles easily. In fact, our ability to engage with customers early, which we can on the next generation technology, to work through their needs to bring these very complex offers to the marketplace fast and at scale with a significantly better uptime and outcome, we believe is a differentiation. We focus on optimizing performance per watt, performance per dollar at the data center level. We focus on our services, our value add and deployment, our financing side, the ecosystem that we bring to our customer base. None of that changes in the next generation of technology. And to be honest, I think the opportunity for us gets greater in the future as we head towards 500 kilowatts a rack of power density, moving to a megawatt and beyond. The engineering skill required to do that at rack scale is significant. We've invested in that ahead of the curve, and we believe that gives us the opportunity to differentiate, remain the leader in time to market, drive broad installation and deployment capabilities ahead of our competition at a higher level, uptime of 99% or better. And that's why we win, and I don't see that changing. When I look at the mix, two forms of the mix that I'll address is we saw a change in the quarter towards GB300. So in our backlog of $18.4 billion, there's been a significant shift towards GB300 as expected. And then lastly, we continue to see great build on our 5-quarter pipeline around sovereigns and around enterprise, and remain very encouraged about the opportunities in both.
Thanks, Mark.
Great. Thank you very much.
Of course.
And the next question will come from Ben Reitzes with Melius Research.
Hey, great. Good execution with the commodity environment, guys, and I'll try to be concise for Paul. The question is around your AI server margins. You mentioned it was up sequentially. I was wondering if you guys could talk about, order of magnitude there. And is that going to continue into the 4Q? And are you starting to see more product attach, more high margin attach to that end? Thanks.
I'll take a run at it, Ben, and then David can certainly add to this. Clearly, we made reference in Q2 that we had some one-time cost elements that hit us. If you recall, we talked about expedites and supply chain reconfiguration. Those went away in Q3 as expected. We also talked about shipping a lot of the early aggressive GB200 deals in the quarter. Those went through the system. And we continue to now see the ability to add differentiation, as I just mentioned in the previous question, that we see in the GB200 and 300 designs. And our margins move to, say, right in that range that we've talked about, mid-single digits. We see that continuing. This part of our long-term value creation framework that we laid out 8 weeks ago is what we'll continue to talk about here. And we believe that we can operate going forward in that range. In fact, we're very confident of that. And then we also had a mix change, or if you will, a change in customer mix to the good. When you look at the broad portfolio and diverse customer set that we have within the AI portfolio, shipping to a broader set of customers across a greater range of solutions helps margin. Hope that answered your question about AI margins.
Yeah, thanks a lot, Jeff. Appreciate it.
Of course.
Thanks, Ben.
And our next question will come from Eric Woodring with Morgan Stanley.
Hey guys, thank you for question tonight. I wanted to touch on PCs. Jeff, you sound very bullish on the PC opportunity into next year. Some of the channel partners earlier in earnings were talking about maybe the seventh inning of a PC refresh. And I'd love to just get your comments because you sound more bullish. So where do you think we are on the PC refresh? And is that still Windows end-of-life upgrades that still need to get done? Or are there new factors that you think could elongate the PC cycle well into 2026? Thank you.
Sure, Eric. Maybe a couple of things. One, we have not completed the Windows 11 transition. In fact, if you were to look at it relative to the previous OS end of service, we are 10, 12 points behind at that point with Windows 11 than we were the previous generation. So we still have ample opportunity to convert. If memory serves me right, the installed base is roughly $1.5 billion, or 1.5 billion units. We have about 500 million of them capable of running Windows 11 that haven't been upgraded. And we have another 500 million that are 4 years old that can't run Windows 11. Those are all rich opportunities to upgrade towards Windows 11 and modern technology. Equally important, AI PCs. Small language models, more capable applications, improvements in operating systems and their capabilities in the embedded AI there, the use of an NPU, the capability of an NPU in future PCs gives me the view that the PC market will continue to flourish going forward. Now let's define flourish. We have the PC market in our outlook roughly flat year over year. That's after a year that we grew mid to high single digits. I think it's flat as we look into next year's planning horizon, and we're building plans accordingly that would take share against that outlook.
Thanks, Eric.
Awesome. Thank you, Jeff.
Of course.
And the next question will come from Wamsi Mohan with Bank of America.
Yes, thank you so much. I was wondering if you could just maybe give some color around this AI business. You noted very strong conviction going into fiscal 27. Obviously, you just raised your guide here from 20 to 25 billion. Can you just put that in context of some of the financing issues at neoclouds and how much of sort of your conviction and growth is predicated on some of these neoclouds being able to procure financing versus maybe other customers that you might have visibility into? And Jeff, if you could just clarify, you mentioned the cost base moving up across the product portfolio, and I was wondering if you could maybe just share at the highest level, how much of that conceptually could you recover from pricing versus how much of OpEx reductions are possible to offset some of these pressures? Thank you so much.
Maybe I'll start, Wamsi, and Jeff can add some color. Look, I think if you start answer first, you look at our Q4 guidance, $9.4 billion. That represents $25 billion, obviously, for a full FY25. So you look at that appetite for AI demand, and it's across the neoclouds, sovereign opportunities, and obviously within the enterprise. Shipments of $5.6 billion in Q3, orders at $12.3 billion. That's year to date at $30 billion. Backlog at $80.4 billion. And as Jeff referenced in his opening remarks, the next 5-quarter pipeline is multiples of that. So every conversation we're in, which is also us being very aware of all the opportunities that are out there, is about demand. It's about opportunity and eagerness to work and see the opportunities in front of us. So we actually see huge scale to come. Every opportunity, reality is we're not going to win them all, but we love our momentum that's there, and we think we're well positioned to meet the expected needs of the customer base.
Yeah, I would add to that maybe some color. $25 billion this year, 150% increase over last year. The guidance that David called out, we will ship nearly as much in Q4 as we did all of last year. I think that gives a reflection on the need for compute the need for, and what we see as token generation increasing at an incredible rate, and the corresponding compute that has to be behind that to generate those tokens. It's reflected in that 5-quarter pipeline that David said that is up across all 3 customer types, neoclouds, sovereigns, as well as enterprises. And we're seeing progress in all 3. So I think that's very important for us to make sure that we communicate that the momentum as we head into Q4 continues. You saw that in the orders in Q3, the backlog building, and significant shipments in Q4. If I flip to the other question about the cost basis and our ability to recover, that's an interesting question. We've said over the years, in normal times, when our input costs go up, we can recover roughly 2/3 of that cost in a 90-day period. I would tell you this is not normal times. This is extraordinary times, and we put extraordinary actions in place weeks ago as we saw this to be able to mitigate the impact upon our company, our customers, and our shareholders. And again, it goes back to our business model. Direct signals, we understand the demand, our long-term partnerships and agreements with our partners that make DRAM and make NAND, the agreements we have in place around capacity. Those relationships are meaningful and impactful as we navigate these types of situations that are unprecedented. And then our model gives us tremendous flexibility, whether that is to reprice, whether how we set out quotes, whether that's to reconfigure, redirect to different products, the ability to determine how long price will be in effect, the ability to understand where we're going to drive demand to and change our demand generation vehicles to drive that. It's important that our engine and the way we run, I think, is very different than others in our ability to respond. And those of you that took note, you saw that in COVID in a very similar situation, the experience that we had there where there was material shortages and increased cost, our ability to navigate that, I think, was unmatched in the marketplace. Our supply chain is very good at this, and we're going to lean on them. Those lessons learned from the COVID time and most recently what happened with tariffs, I think, show that we can operate with the right sense of urgency. We're managing this real time, actively managing it. I was on 3 pricing calls today alone, and we're driving to get a better outcome. So our belief is we will do better than our normal 2/3 in a 90-day period, given the actions that we've put in place and our understanding of demand and our understanding of supply.
Thanks, Wamsi.
Thank you.
And our next question will come from Amit Daryanani with Evercore.
Yep. Thanks a lot for taking my question. I guess maybe you could just spend a little bit of time on ISG margins improved rather well by about 350 basis points sequentially. Can you just touch on what drove the strength in ISG margins in Q3 versus Q2? And then, your guide, I think, reflects the largest AI server revenue number you guys are going to put up in Q4 at $9.4 billion plus. How should we think about that impacting your P&L? And do you think gross margins should remain in the Q2 levels, or is there kind of further movement from there as we think about the P&L impact from the AI numbers in Q4? Thank you.
Yeah, thanks, Amit. Look, really pleased with the team's execution in Q3 around ISG Op Inc. at 12.4%, like you said, up 350 basis points quarter on quarter. So a lot to like here. I guess a couple of things to call out. First, on the storage side, look, Q3 was no different than what we've seen year to date, where we've seen demand growth at a premium to market for our Dell IP storage portfolio. Probably a strong call out there will be PowerStore also, 6 consecutive quarters with double-digit growth. So obviously that Dell IP portfolio gives us better operating margins, as you'd expect. So there's a natural mix effect that creates a tailwind there. Secondly, in storage, our pricing discipline was something I was very pleased with also. And then thirdly, look, the focus of the teams looking to find improvements by product level within the portfolio also. So again, like I said, a lot to like on the storage side. Also within that, on the AI margins, like Jeff said earlier, Q3 on track to what we've consistently committed to, mid-single digit op inc here in relation to that. And we obviously didn't have those Q2 one-timers that were there, and we'll keep that consistency as we go into Q4. And then your reference, I think your question was Q3 into Q4. Then from a guidance perspective, if we expect to continue to make progress. Our Q4 profit guidance is anchored again through the storage P&L. With the Dell IP storage growth, we expect to make it 4 for 4 in terms of quality growth in that portfolio. That should allow us to grow at or likely slightly ahead of normal sequentials, which will allow us to see an uptick in our op inc rate sequentially also into Q4.
Yeah, Mohammed, I just, again, to emphasize that. AI shipments 5.6 to 9.4 quarter over quarter. Our strategy of focusing on Dell IP storage, the mix is up, the rate is up, and increased velocity of our traditional server business is the recipe for the performance that we expect to have in Q4, while increasing AI shipments significantly, as we mentioned.
Okay, thanks, Amit.
And the next question will come from Aaron Rakers with Wells Fargo.
Yeah, thanks for taking the question. I want to shift gears a little bit away from the AI to the more traditional server business. Jeff, I think in your prepared comments, you mentioned double-digit demand growth. I think if my math's correct, I don't think revenue grew necessarily at that clip. So I'm curious if you could talk a little bit about what you're seeing as far as the aged install base, where we're at in the upgrade cycle for traditional servers, and do you think double-digit growth is a good baseline that we could think about going into fiscal 27 as that demand follows through to revenue? Thank you.
Sure. A couple of comments. Yes. So the double-digit was demand. The P&L certainly didn't track that, but we obviously would have built backlog as a result. We talked about North America recovered or improved quarter over quarter, and that the international market demands were double digits, and that's 2 in a row now off last quarter's double-digit performance. We continue to see modernization in the data center, consolidation in the data center, which is reflected in the fact that our TRUs continue to go up, our content continues to go up, the number of cores, how much DRAM, how much NAND per server is corresponding with that. And we still see a pretty significant opportunity with roughly 70% of our install base is still the older generation servers that we have shipped many years ago. So the ability to continue to upgrade them, modernize them, is the opportunity that we have in front of us. And then we see that cycle continuing into next year. This has been a longer consumption cycle. We're encouraged by what we see. That's reflected in the Q4 guidance that we just talked about. And that momentum, as we update you on 27, will give you the best look we have. But right now, that momentum of consolidating, modernizing, refreshing old servers to new one continues. And we're working on making sure our pipeline grows and we can convert it into orders as quickly as we can.
Thank you.
Of course.
Thanks, Aaron.
And we'll take our next question from Michael Ng with Goldman Sachs.
Hey, good afternoon. Thank you for the question. I just wanted to follow up on the commodity cost recovery point, which was, encouraging to hear. When you talk about the, actions that you've taken to help mitigate the impacts, I guess, do you expect to see a benefit from below market costs, strategically purchased commodities? And, if so, how long can that be, a benefit for? And I think you may have alluded to, opportunities to maybe like reprice longer term commercial contracts in response to rising commodity costs. Just wanted to see if that was the case, or, are there any kind of longer term contracts that might inhibit your ability to price it all? Thank you very much.
Well, I mean, maybe working backwards towards the first parts of your questions. I mean, clearly we have to do what's right by customers. And where we have contracts, and we will honor those contracts and work through the situation. I think what maybe I didn't convey correctly or to the right balance that's needed is we tend to talk about the commodity cost here. There's a commodity scarcity too. In other words, there's not going to be enough parts. So there's a combination of the demand that's in the marketplace, one's ability to procure the part, which is why job one of our supply chain is to get the material, never run out of parts, and then price it to the commensurate value with having that material. That's what we're going to work our way through. We're, I think, very skilled at this. The last 2 cycles have certainly honed our skills, and we'll use all of the tools available from configurations. It's not uncommon in the PC industry to see configurations come down. That's happened before, likely to happen again. That tends to happen in the lower price bands. You tend to see mix where what comes out of the factory isn't necessarily what was forecasted. We think we have a unique ability to adjust our demand faster than anybody. We think the ability to navigate how you price with a very large transactional business, selling to small and medium businesses, selling to the day-to-day needs of many corporations, we can adjust that to what's available. Those are all skills and techniques that being a direct manufacturer and a direct seller, we believe gives us an advantage and will help our partners and customers through that as well. And all of these tools that I've mentioned in one of the previous answers are in effect now. Our special pricers know the cost for all of next year, our best guess for next year, what's available. Our sales force, our product business leaders all know, and we're working as one team to collectively work this real time, as I mentioned before, to get the best outcome for the company, our shareholders, and customers. That's what we'll work through. So our ability to recover, I think, is better than in normal times. And I think that's probably amplified or improved by the fact that there'll be a scarcity of parts.
Thanks, Mike.
And our next question will come from Asiya Merchant with Citigroup.
Great. Thank you for taking my question. Just looking ahead into storage, seems like that business, is doing perhaps, a little bit better than what was previously expected. As you look into the server demand that is driving up the revenues for the core server, and as you look into next year, just given all obviously the backdrop of commodity headwinds here, how are you thinking about storage from here on? And if we can get that inflection towards more Dell IP storage, which is obviously positive for your margins, quicker relative to some of the unwinding of the HCI storage, if that can happen faster than what was previously communicated at the analyst day. Thank you.
Yeah, I think, again, just to clarify, I guess, in Q4 and what we're looking at in terms of guidance, continuing to show that Dell IP storage growth and seeing that sequentially, hopefully above or expected to be above normal sequentials, that will allow us, along with the pricing discipline, to keep that margin improvement coming along for a P&L. On the server comment, again, strong demand in Q3, particularly in month 3. So to Jeff's point earlier, building a bit of that backlog. So I think you can expect high single-digit growth in that business for Q4, which would end us on a high point as we exit the quarter. That said, look, as we head into FY27, still very early. Obviously, it's a lot happening in the market and changing. I would still reference you back to the long-term framework that we've got. I think it's a good reference starting point. We'll work from there and then obviously be agile as we assess and see how it evolves. But yeah, for now, I think it's still a little early for FY27.
But strategy-wise, we made the pivot to Dell IP, not looking back. It is serving us well. The mix continues to increase across our storage revenue dollars. The margins within the portfolio continue to improve. We talked in our comments about the all-flash portion of the portfolio growing double digits for the second quarter. So think PowerMax, PowerScale, PowerStore, ObjectScale, and PowerFlex all growing. We've talked about PowerStore in 7 quarters of growth, 6 of those double digits. The buyer base is growing. The net new customers buying Dell storage with PowerStore is up. The strategy that we've flipped to, which really drives this notion of 3 core areas, where the Dell Private Cloud, which is really open, disaggregated, and automated storage. It's our 3-tier storage with our Dell Automation Platform. Our AI and unstructured storage assets, so think of those as the construct of the AI data platform, and then cyber resilience, which is really data domain and Power Protect. Those are all Dell IP assets. That's what we're driving. That's what the sales force is incented to do, and we're seeing nice results from it.
Thanks, Asiya.
Thank you.
And our next question will come from Simon Leopold with Raymond James.
Thanks for taking the question. I want to see if you could maybe unpack the elements that contribute to the roughly $5 billion of incremental AI revenue for the full year. I guess what I'm trying to get at is, how much is this about your ability to get key components, new orders, or existing orders occurring earlier? Just help us unpack what factors led to the raised forecast for AI. Thank you.
Well, at the highest level, $12.3 billion of new orders and a growing backlog, and then a supply chain that I think is unmatched, that finds materials and gets materials lined up with customer availability. I mean, this is equal parts customer readiness, buildings, power, direct liquid cooling. So we've used the word lumpy before, which we purposely didn't use here, but it's really driven by a customer's readiness and our ability to deliver, matched up with the supply chain's ability to get the material, and matched up with our sales force out winning new opportunities across the Neo Cloud customer base, the sovereign customer base, and enterprise customer base. So it's that combination, and why you see one quarter $5 billion, one quarter $9 billion in shipments. It really is equal parts customer readiness, customer delivery acceptance that drives that. And the stars aligned in Q4 with the amount of orders, with the GB200 and GB300 business that we have booked, that we'll be able to deliver at that rate in Q4.
Thanks, Simon.
And the next question comes from David Vogt with UBS.
Great, thanks, guys. Maybe just one for David. So, you talked about margins and commodity pressures quite extensively, but can we look at your purchase commitments as a barometer for how you're thinking about margins going into next year? I know a big chunk of that is probably tied to the AI server business, but is there anything in sort of those purchase commitment numbers that we could look at as sort of evidence of how you're thinking about where DRAM and NAND prices could be? And I think last quarter you exited the Q north of $5 billion, but most of that is for this fiscal year. So if you can give us any update on kind of how to think about purchase commitments going into fiscal 27, and as an indicator, that would be great. Thanks.
Yeah, sure. Look, we've no discernible change in the pattern of our purchase commitments, or in relation to positioning on things like inventory, et cetera. So if you think of AI, and this is a good kind of litmus test for us within the finance side as well as we observe it. You take that $12.3 billion that Jeff just referenced, but if you look sequentially, we actually took down our inventory values about $300 million. If you look at it in a year-on-year, the year-on-year inventory is roughly flat, give or take. Yet our year-to-date demand is up over $19 billion in that period too. So obviously, we have our normal supply chain procurement processes kicked in as part of it. So no real discernible change from last quarter or anything to read in as we look into FY27 just yet.
Yeah. Thanks a lot, David. Operator, we'll take one more question, and then we'll hand it over to Jeff for a close.
We'll take our final question from Tim Long with Barclays.
Thank you for squeezing me in. Two-parter, if I could, on gross margins. First part, talking about the mix in AI servers, as you start to convert more of the Neo Cloud and sovereign and enterprise to revenues, would you expect a change to that mid-single-digit operating margin? Could that move higher, or how meaningful would that be? And the second part on the PC side, I think there was a comment at the analyst day about really doing well in the high-end commercial, but trying to recapture share in other parts of the PC market. Is that something that we could expect might impact operating margin on the PC business? Thank you.
Yes, maybe let's start with the AI side. Look, we're going to stay consistent on our mid-single-digit delivery in terms of operating profit. We'll stay within that range. While we'd like to in every deal, the reality is we won't, right? And a lot of those can be competitive, particularly the larger ones. So look, we'll remain judicious as we manage the profitability and the ongoing activities there. Some will flow slightly lower, other deals will be slightly higher, but we'll stay very consistent as an objective within that mid-single-digit momentum as we kind of go forward. And that's, if you like, the bedrock of which we'll build it on. The other element for me, which is part of it, is making sure every deal is accretive from a dollar perspective too. So again, cash flow is something that's the forefront of all our operations. We think that's a good thing. In fact, we think it's a great thing. And we want to make sure we keep it front and center as we look at the activities.
And Tim, your second question on PCs, when we were last together, you're exactly right. I talked about the PC business being a scale business, and our share had slipped in the non-premium segments. And we leaned in this past quarter. We leaned in with our Dell Pro Essential and education boxes in commercial, and we were more aggressive into holiday in the consumer business. And the results are encouraging. International growth accelerated sequentially, up double digits in demand year over year. That's exactly where Dell Pro Essential is targeted. And while it is a very competitive marketplace, we made a slight reference to it, but I'm going to call it out specifically. We returned to demand growth in consumer for the first time in 3 years. We returned to growth in the consumer business for the first time in 3 years. We're going to continue to work on our cost position, tuning the products so they're the right products at the right cost for the right price span. We went into the market with what we had. We'll continue to refine that. Lots of changes in the roadmaps going forward, and you have our commitment that we can grow while balancing the profitability within the operating ranges that we've given.
Thanks, Tim. And to you, Jeff, to close us out.
Thanks, Tim. Sure. Thank you all for joining us today. A few points as we wrap up. First, we achieved record Q3 results across both revenue and EPS, underscoring disciplined execution and the strength of our business model. Second, our AI momentum remains exceptional. We saw record orders in Q3 and have booked $30 billion through the first 3 quarters of this year. Our pipeline and customer base continues to expand, and we remain well positioned to capitalize on accelerating demand for AI solutions. And lastly, we saw improved profitability and strong cash generation, enabling above-trend capital return to shareholders. We are set up well to close the year strong and to drive long-term value. Thanks for joining us today, and happy Thanksgiving, everybody.
Thank you. This concludes today's conference call. We appreciate